Okay, in this video, we are going to talk about drawing support and resistance lines. We're going to talk about when and where you use them, the time frames you want to draw them on, how to zoom out so you can see everything to draw on it, how you actually click buttons to draw the lines, where you put the lines, how those lines actually affect the way you want to trade something, and then some examples of how support and resistance is actually um, used and how it's affected the market in the past. So the most important places you use support and resistance are going to be the indexes, because that's going to be something that's going to affect every stock that you're trading at any given point in time. The S&P 500 and the Nasdaq are the two I paid the most attention to. So the S&P 500 and Thinkorswim is SPX as the ticker symbol. Nasdaq is NDX. The Russell 2000, which is an industrial index for the most part, is RUT. So Nasdaq is tech stocks, industrial stocks, and then this is kind of a mixed bag of industry leaders. So the indexes you're always going to draw support and resistance lines on. Individual stocks for money presses, you're not going to draw them. For any type of swing trades or shorter term trades, you're going to want to draw them on that. For money presses, we're looking for these little anthill climbs up like that, so they're just not very relevant. On an individual stock, the time frame that you're going to want to put your chart at is always going to be 1 year, 1 day. That's enough time that you can see relevant levels that have happened in the past, but not so much that you're going to get out into things from like 2005 that aren't that relevant. Those are going to be the most important things. You can also go to a higher time frame to see something that might have happened like a year and a month ago. But for indexes, I go ahead and switch it to 20 years and a day. And you don't have to be 20 years. It only has to really be 5 years, but I use 20 years for IPOs. So I just reuse it for both things. If you don't know how to set your chart to 1 year, 1 day, or something like that, you click on this little T or where the time frame is. You click on time frame down here. You click on daily if it's not already checked. You switch the interval to whatever you want. Max is the most. 20 years is the one right before that. And then you can go up to a year like that. And then you'll switch, after you do that one, you'll switch this to say a day. And then if you click that, it makes it a favorite where you have it in this list. Then once you have it as a favorite, you can edit and pull it up so that you have it whichever order you want it in. So I'm going to go back to the 20 year. Now you'll notice I have it on 20 years, but this is just March of this year. And we're at September 7th, so there's no way that's 20 years. If you grab your fingers and pinch out, you'll see that you can go way back. But on a 1 year chart, when you're doing that, the way you want to draw your lines is basically by zooming out far enough with your fingers that you can see the oldest day of the year, and then zooming back in until you can see what is September 7th back here and September 7th here, whatever the current day is. That'll give you a good place to draw your lines. And then I'm going to go ahead and switch it to 20 years. I think it kind of kept the same distance there, so that's perfect. So when you're actually drawing your lines, you're going to click or tap anywhere. Sorry, forget it's an iPad. You're going to tap anywhere on the screen, and then you're going to tap on this little pencil icon, and you're going to click on New. We're going to use price levels for support and resistance every time. And to start one, you just tap on the screen, and then you tap on the screen on the other side. It automatically draws the line all the way to the right, no matter where you tap, but it only draws the left-hand side to where you tapped it. So I try to tap somewhere like from here over, sorry, actually from there to about here to make sure you get enough space on the screen, your line's not super short. And then you just grab it in the middle and you drag it down to where it needs to go. And then you'll click on done to set it, but now I'm going to talk about where you set it. The first and most important place that I set support and resistance lines is current all-time highs for basically the year if you're looking at a year chart, but the last 20 years if you're looking at the 20-year chart. You just set it right up there. So you drag it up. You can zoom in if you need to see it easier. You drag it up and just touch it to where that is and say done. And that one's out of the way. Then I look for the last all-time high. So I'll go and make a new drawing. And I'll go back in the chart to see if that really is the last all-time high. And you can see right in here, this is saying 2900. So that's about 2950. But if we go back up, it's saying this is over 330 here. So it's pretty obvious this was the last all-time high. So I'm going to go ahead, and that price level is pretty high up. I might have just messed myself up. Okay, so I had to zoom out, but I'm going to zoom back in. The last all-time high was right here. So those are two major points I would just consider drawing lines at every time, no matter what. Because that's going to be a place where the market pauses, either when it goes up or goes down. After that, the other lines that you'll draw are just places where you get a lot of what we call touches. So places where the market went up and stopped and went back down, or was going down, stopped, and went back up. And so if you draw it, let's just put one right in here and see what happens. This is an example of what I was talking about with touches. Right here you can see it's touching the line, it's touching the line, it's touching the line. It kind of touched the line, but that just went up and down past this, so that doesn't really count. But it came up and touched the line here and paused for that one specific day where you see the red candle. Came down, went a little past it, but for the most part, it stopped in that area. And then right here, it touched it again. So your idea is not to get it perfectly where it touched every single one, but pretty close. So we'll go ahead and edit that one down a few dollars. Probably could have typed it in a lot faster. And that wasn't close enough, but it's good enough. Doesn't have to be perfect. And as you can see, that put it farther into that area right there. So your idea is to kind of split the difference between a bunch of different points. So if it was touching it on the upside here and touching it on the downside somewhere else, you kind of draw the lines between it. So another line that we could draw here. Oops, I clicked remove drawing. Another line we could draw here is right through here. So I'm going to go all the way back there and kind of make it touch. So that looks like a pretty good spot there. Let me show you why. So if we zoom all the way back to here, you can see it came down, touched it, went up that day. You can actually draw this even farther back. So that's probably as far back as I'd want to go. That's back into 2018, but really, looks like it goes all the way back to here. So we'll say done. So went up, touched it. That was probably its all-time high at the point. Went sideways for almost an entire year, or half a year, a few months. Started going back up, touched it again. This time it went straight up through it. So that was a breakout. A breakout is where it goes up to the support or resistance line and then goes right past it. Doesn't have to be a gap between it, but they call those specifically gap ups. Then you can see after it went up a little more, it came right back down and it touched that line and it stopped. So that means it's now a support level. So a resistance means it's like hitting its head against a ceiling and it can't go any higher without punching through it. A support level's like a floor. It can't go any lower without really stomping through it and putting a lot of force on it. So it's kind of just a spot where the market has to exert more effort to get past. And the reason why you draw lines like this is the market has a tendency to pause at points that it paused before in the past. And the more points that it paused at that same spot in the past, the more likely it's going to pause there again in the future. One of those places it really likes to pause is where it had an all-time high or a really big low. So this was a low last year, and this was the low from COVID-19, the sell-off for COVID-19. So as you can see, this bottom trend line, let me change the color on this one so we can really keep an eye and make sure we're looking at the right one. Let's make it purple. Okay. So you can see it came up, went through it, stopped on it for a minute, and then it broke through it on the downside. So breakout can be to the upside or to the downside. That started a new trend down. When it came back up and finally touched it again, it had a little bit of a pause for a couple days before it broke through it. Then you can see it went back down through it, and when it tried to go back up again, it hit its head and went down. Hit its head there, found enough momentum to go through it, and then it rested on it. Instead of going back down here, it stopped right there, acting as support. It went up to another level, came back down, went through it a little bit, but for the most part hovered around this area as it was going through. Went back up, came down, touched it again, went a little past it, went back up. By the way, it doesn't matter if you're drawing the line through the bodies or the wicks. Some people always want it to touch the wicks, some people want it to always touch the bodies. I say wherever it's touching the most amount of points is going to be the best spot, not necessarily if it's a body or wick. Like, this isn't perfect. A perfect support line for this area would actually be this right here. If you had it down here, that would technically be your support line. And if you see here, you can actually go back a little ways and kind of see it stopped right around where that spot was right there. But I would pull it up just a little and make it where these went past a little. That one stopped there. Kind of had some touching back there. That would be a better spot for me. But it doesn't have to be perfect. You just have to know, hey, when it gets close to this point, it's probably going to pause and hit some support or some resistance that it has to break through. Then we see it break back up in the air from this spot, or not break up, but just trend up. Then it went down, but when it went down, it actually stopped right in here and went right back up before it continued down. So it was still in a downtrend, but it was a pausing point. It was a support level. Going back to our current trend here, you can see it was uptrending for a long time, reached a new high, came down again Friday, and broke through this previous all-time high, which I'm going to zoom out. The all-time high was back here, but we also saw a pause in the market when it got back up to that level where it kind of squished and went sideways for a week and then it went up. So now that it has gone down, it has broken that line, but it immediately went back up. The fact that that's a long wick and it didn't stay down is a sign that the market may not be starting a downtrend. If this went down like that, and then the next day this went down and it had the same type of candle as this, where it's a full body, you'd be a little concerned that the price is staying below the support level, and if it started again on Monday or the next trading day and went down even lower, I would expect it to go down to this line right here, or at least right here where that is. So let me draw another line. I would expect it to go down at least to right in here. Matter of fact, I'm going to leave this support line on in case it does go down. So this is a more recent, shorter line, and it might have some merit to being farther. By the way, if you want, you can tap and hold on your price level. Click on properties and click on left extension. It never does it by default. But if you click on left extension too, it makes it go all the way across the screen to the left. So if you want it to be all the way across so you can zoom out and go back 20 years and see if the market ever touched it before, that's the easiest way to do that. So just to see in here, this place that I just drew as my next support line, if it continues a downtrend, was resistance here, was support here, was support here, was a little bit of resistance, but it kind of just broke through that. Was also both a resistance up here and a support down here, support here, and that was the last time we had that price level. So it's a strong enough spot. You have 1, 2, 3, 4, 5, 6 times the market has reacted to that spot by kind of pausing or reversing, changing directions. So the more times you see the market change directions or reverse at a point, the more likely it is that line's going to mean something. Like I said, all-time highs I automatically count as a line that means something important. And then this purple line was more for just an example of how even from 2018, an all-time high from 2018 has affected the market all the way up until June of this year. So that's why the support and resistance lines are drawn, is because it has a continuing effect on the market for a while. Usually doesn't happen 10, 20 years, because what happens is the market's been growing over the last 20 years and it's never gotten that high before. So for me to draw lines back in here, let's say 2010, for me to draw lines in 2010, the highest ones would be at 1,450. The lowest low that we had this year was 2,186. So that was still like $500 above what the all-time high was from 2010. So there's no reason for me to go back that far drawing lines. But to go back to 2018 or whenever, basically everything above what this low was, I could draw lines all through this area, and if the market decided to turn down, those would all be relevant. But because I believe we're just in a short, violent but short pullback before the market continues an uptrend, I'm going to not draw lower lines until the market actually breaks below the ones I've already drawn. So I won't draw too many lines higher than where it's current. Like if this was today's candle, I wouldn't be trying to draw lines. Well, let me rephrase that. If this was today's candle, I would not be trying to draw all the lines way up here. But for the most part, I go all the way up to the top. So I take that back. I would go all the way up to the top, but I would not go all the way down to the bottom when it's trading at the top if I haven't drawn the lines yet. So you only draw the ones that are pretty close to where you're trading. Because this is $3,400 right now, the lines are about $100 apart, but let's go to Facebook. On a stock like this, you can see they're only like $20 apart. So it broke through that, went up, touched it, came down, and stopped. So I'm counting this as a support level, but really, realistically, right here is actually a better spot. So I'm fixing something I did before. So you can see it bumped its head there and went down, went through it, bumped down on the as a support level and went back up. So this is now a support level because the price is above it. I don't know if I've said this already, but it's always a resistance level if the price is below it, and always a support level if the price is above it. And it's interchangeable. That same line can be a resistance level from the past and a support level for the future, all because the price went either above it or below it. So right now, this is a support level because it's above it, but if it breaks down below it and stays there, now it's a new resistance level, and it's no longer supporting anything, it's fighting against the market going up. So you can't say, okay, this is one where it's support, so I can ignore it if the market starts going up, because the way that people think is if it gets close to its all-time high again, like this was its all-time high, if it gets close, I'm going to sell and make a profit. So they sold, and they kept it going sideways, but if it wasn't as bullish, it would have gone down a little before it went up. Same thing with it going down. If people see it going down and break through a level, they're going to go, oh no, the market's going way down, I better sell, and that's making the market go down. So it's a herd mentality. It's almost like a self-fulfilling thing here, because as the market goes up and it pauses because people are expecting it to pause because that's where it paused before, it's going to pause there again because people are putting take profits where they think the market's going to go and stop and maybe go down again before it goes up. So they want to make their money at what they think the high is going to be for the short term. Same thing with the lows. People think if it gets down to where it stopped this time, right now it's a great time to buy before it goes back up again. So the reason why it doesn't keep going lower is there's enough people buying, saying I think it's going to go up, and that counteracts the thing going through it. So if you see a place where it goes through it either to the upside or the downside, that means there's a lot of force. You have, like right here, You had a lot of people taking profit for an entire week, and the market still decided to go up another almost $200. So there's a ton of buyers. And then, because it got so high, people got greedy and wanted to take a profit, and it dropped it down. And then when people get near this red line here, they started buying again. So even though it was dropping down, people were buying, 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 and they brought it right back up. And that's where it ended for the day, is where you see that red dotted line. So that's kind of the mentality that people have with support and resistance. It's basically a concept saying what's happened in the past is likely to happen in the future at the same points, because historically we've seen it happen that way for decades. And like I said, it's probably partially because of the way the market works, but also because enough people have seen these patterns that now they expect them, and that makes them even more almost guaranteed to happen consistently, because people are trading based on these support and resistance levels now. So we've covered where you use support and resistance lines at, mainly the major indexes and swing trades. And money prices that are going wrong, you'll also use them. We covered that you'll want to use it on a year and a day for most stocks. And you can go out 5 years in a day. I use 20 years in a day because I use that for something else, to look at things that might have happened up to 2, 3 years ago that might be relevant. Like I said, uptrending stocks get to a point where the low that you've currently seen is still higher than all-time highs from a couple of years ago, so there's no point in going past that. We talked about drawing the lines by just clicking on the pencil and the new and then price level. We've also talked about how you want them to be touching as many places as you can, both for the market pausing when it was going up and also pausing when it was going down at that same level. So it's just cutting a line straight through where a bunch of places touch that line and stop in either direction. And we also talked about how that's going to help you with your trading and what you think is likely going to happen next with the market. And so that should cover just about everything you need to know for the basics on support and resistance.